What is going on, guys? Nick here, back with another video. It's earnings week 3, and I'm still working through a marathon of updates as they come out. Now, Chipotle's earnings just dropped last week, so let's take a look and see what's changed with this quarter and update our valuation. So, Chipotle reported earnings on February 8th, and investors were pretty happy with what they saw. The stock jumped about 8% after beating expectations. Chipotle said that some of its price hikes helped offset inflation without hurting demand, which can be a big issue for a lot of other companies. Now, the price hikes do seem pretty modest to me. Personally, I usually expect to pay around $10 when I go to Chipotle, and I can still get it delivered to my house for just $12.55 plus probably another $3 for the tip. Chipotle is still a pretty good deal compared to a lot of other fast food delivery options for me. Now, Chipotle also said that it's increased wages and they're back to their pre-pandemic staffing levels. They also said that digital sales have increased to 42% of their total sales. They're forecasting 235 to 250 new stores this year. They expect to eventually hit about 6,000 to 7,000 stores in North America as a long-term goal. So Chipotle reported $5.58 per share versus $5.25 expected, and revenue came in at $1.96 billion, which is what was expected. So when we look at this quarter in red with the previous 3 quarters making a full year of earnings for each quarter, we can see this was a fairly modest quarter. Chipotle CEO Brian Niccol said the company paid more for beef, avocados, and freight this quarter, and that if that stays elevated, they will have to make some changes by increasing prices and cutting some more of their costs. Looking at the past 10 years of revenue and profits, Chipotle has continued a very strong run since 2017, with the last year actually seeing a pretty big jump in profits. They actually doubled profits between the 2021 and 2022 fiscal years. When we look at Chipotle's revenue versus expenses, I had to change up this chart a little so you can see it a little better, but Chipotle doesn't really report a cost of revenue. Instead, they make it a little more helpful by showing food, labor, and occupancy costs all as separate. Surprisingly though, food, labor, and occupancy costs in proportion to the revenue all dropped by about 1% each when we compare it to 2022. So this definitely speaks to the pricing power, or in other words, Chipotle's ability to raise prices without losing much demand. So when we look at Chipotle's forecasted earnings, the current expectations are for them to grow from about $7.5 billion in revenue and $625 million in profits in 2021 to $11.3 billion in revenue and $1.4 billion in profits by 2024. When we look over at Chipotle's revenue growth, we can see the current forecasts are for them to grow between 13% to 15% over the next few years. However, when we go over to their earnings growth, Chipotle has actually maintained a much higher net income growth in the past, and that's currently projected to continue. To value them, it probably makes more sense to split the difference between their revenue and net income growth. So I think to value them, I'll go with 18% for the bottom end and 23% growth for the top end. This gives us a fair PE value between 44 for the bottom end and 67 for the top end. When we look over at macrotrends.net, we can see that Chipotle has historically traded with a much higher PE ratio, mostly between about 50 to 100. But if you look at the earnings per share in the middle, the reason why the PE ratio changed so much is there was a drop in profits in the middle of 2020, throwing off some of the numbers. It does look like the PE ratio has headed lower, even as that earnings per share shows a pretty strong increase. When we look at my current valuation using a PE between 44 and 67, this puts Chipotle right around fair value. Compared to what it should be worth by 2024, the stock currently has a lot of upside, somewhere between 43% to 117% by 2024. So in my opinion, Chipotle is a strong buy right now. They have an excellent product that customers are more than willing to pay more for. I think their extremely high product quality at pretty low prices for what you're getting gives them a lot of flexibility as they have to deal with higher food and labor costs. And the company's still seeing fantastic growth, growing their profits by about 20% per year. So before you go, make sure you check out this great video I have over here for you next. And as always, thanks for watching.